Hi everybody, welcome to another update on the stock screener. Interim candy store update. There are no changes in the portfolio. We are still in Serabi Gold, Monument Mining and Soma Gold. I still think gold will go to 3000 by next year, but as you know, there was some news yesterday about China not buying gold, and that has initially led to a drop to here, and then we had seemingly good jobs numbers, which were actually not good, but algos are saying that it is good, and gold dropped further to 2300. So yeah, this is a bearish engulfing candle. So that means we need to prepare for the worst. It could go to 2100, 2200 in a short term. So what do we do now? That's the question. As you know, I have this. Yeah, let's first look at this. Where can gold actually fall to? China likes to buy gold at low prices. So 1,800, 1,900. I think they will also buy at this price, 2020. So as long as gold goes to a level of 2100, I think they will buy. So 2000, 2100 should be a bottom. 2300 apparently is too high for them to buy, because you can see here that they are not buying that much when gold is above 2200. So looking at this chart, I think gold should range between 2100 and 2200 in the worst case scenario from China. So China is a put on gold at 2000. I don't think gold will go below 2000, because then China will start buying a lot of gold again. So let's use 2100, 2200. And I have, of course, this upside gold miner chart. We are looking at 2100, 2200 in the worst case scenario. So yeah, we need to be prepared and see what is going to happen when gold goes to here instead of here. There are several companies that will do extremely bad in that scenario. So look at these companies. These will be doing really bad at 2100, 2200. For example, Equinox Gold, that's this line here. Equinox Gold, the gray dashed line, so this goes to here, that's down 60% if we go to this level. And I can show that Equinox Gold looks like this. Now it's fair value, but when gold drops to 2100, what will happen then? Then you get a huge drop in the NPV. So the enterprise value needs to drop from 4 billion to 2.5 billion. That's down 1.5 billion in market cap. So if Equinox Gold goes down 1.5 billion in market cap, what will happen then? It's now at 2 billion market cap. So if that needs to drop 1.5 billion, yeah, here it says 2.5 billion. That's because of the dilutions ongoing. But you can see already that Equinox Gold will drop in half. So $5, it will drop to $2.50. So below, it will make a new low below this zone. Probably have some resistance at $3, but a lot of downsides if gold keeps dropping to 2,100. So Equinox Gold is a no-go based on the upside chart. Let's take another one, maybe Victoria Gold. Let's take Victoria Gold, with also dropped by 50%. So I would not buy these large cap companies. Now it's fair value, but if gold goes to 2,100, look what happens. Bam, drop in half. So these charts are extremely useful to look at the downside or the upside in some of these gold miners. And if gold continues to drop to 2,200, 2,100, be very careful buying these companies here. Agnico Eagle, the same, is going to drop 50%. IAM Gold, Kinross Gold, Barrick Gold, Alamos Gold, even Andean Precious Metals will be dropping a lot. Aris Mining is, it will also drop, but less. So a lot of these companies will drop a lot because they went up a lot, and if gold goes down, they will drop a lot. So what do? We take these companies that are above the 100%, 200% upside level. Why? Because even if the gold price, when the gold price drops to 2,100 or even 2,000, they will still go up, right? Because the line is above zero, so there's upside. Just to show you that, let's take Serabi Gold, which is probably my favorite position. Serabi Gold has plenty of upside. They are growing, reducing costs, and the upside is massive, like 5x at current gold price. If we go to 2,100, yes, there will be less upside, but at least the NPV is still above the current enterprise value. Okay, we will have less earnings, PE of 6, 7, going to a PE of 2 in the long run. But at least there is upside and not downside, like with those other companies. So this is what I invest in companies that can withstand a lower gold price. If gold goes down, we are still going up. If gold goes up, we go up even more. So that's what I like to buy. Let's take a look at Serabi Gold. So gold dropped 3%, and Serabi Gold managed to go up 3%. That is a chart that is ready to keep on rising. Why? Because it's all math, it's all calculated. Cash flows are calculated, and everything is incorporated in these calculations and telling me that Serabi Gold can only go up, not down. Same with Monument Mining, will also go up, not down. And that is based on the following calculation. Only sustaining cost of 1,200, production should go to 30,000. It's currently at only 20,000, but they should be ramping up. Even if we take 30,000 in the worst case and 2,100 gold, what happens then? There's still upside, okay? There is still upside with this company. This is including BIOX. Without BIOX, we could get revenue like this, and then there's still upside. So even without the BIOX at 2,100 gold at the lower production level, there is still a PE of 3 at 2,100 gold. So this is a profitable company and will go up in time. Okay, so that's Monument Mining. Looks good to me. Another one is Soma Gold. They have been delaying. I get that. Limon Mill should already be online, but they don't have enough ore. That's a pity. But when they actually bring Limon online, and I'm sure they will, then the upside is still triple. As you can see here, this is Soma Gold. And even at 2,100, it will still be more than a double. So let's look at Soma Gold. This is the current situation. I have reduced the production for this year, taking into account that there could be more delays. But yeah, by next year, they should be bringing that mill online, going to 44,000. I will give it some more years before they go to 70,000 by increasing the capacity, adding some artisanal miners as well, adding more land packages, bringing Netchi online. They should be able to get to 70,000. I know this is speculation, but yeah. And next year they should have 2 mills online, or at least try to get there. So currently AIC 1350, they will try to reduce that cost. So plenty of upside. If gold goes to 2,100 in the worst case scenario, then we will still have upside. Less upside, but there is upside. PE ratios of 5 this year, PE ratio of 2 for the coming years, and in the best case, when they expand their capacity, we could see PE ratios of 1. Okay, it takes time to build that out, to get mining phases online and bringing new mines online like Aurora, bringing Netchi online. So all of that takes time. But you can see there is upside. So that's Soma Gold. Even if gold goes down, you have upside. So that's what I like to buy in. Mineros, same, has upside. Now you see also some of these companies that are even higher than this, but they have some issues. So Step Gold, the deal is not true yet with Boru Gold, and they haven't built their underground yet. That's in 2026. So there is some speculation on this, a lot of risk. So let's give it a year or so, a year or two, to see if they can actually build it and do the merger. Newcore Gold, PEA stage in Africa. It's cheap, but it's still a PEA stage. So let's see if we get a good feasibility study at some point. Minera Alamos looks cheap, but they are in Mexico with open pits. which will never get permits. So that's why it's cheap. So I'm not going to buy this. I don't like Mexico. Allied Gold also has upside, but it's in Mali, and I don't like Mali. So these four have substantial risks. These four here look actually good. With Serabi Gold having the least risk, I think, because they are producing, they have a plan to increase production. Soma Gold has the risk about the ability to get the mill online, to have enough resources. So there's risk. They also have debt to repay. Monument mining, the risk there is that they can't get the production up. So the last quarter was not that good. So let's see if they can get the production up. Mineros risk is probably Nicaragua. I don't like that country. But other than that, I think Mineros is very good. It has no debt. It's paying 12% dividend. So yes, this is an interesting candidate to buy if the Ruby Gold keeps on rising. Then we have Mako Mining. Yeah, it's a bit expensive right now, but there's still upside. Yeah, that's a good candidate to buy if none of these are buyable anymore. And then Tor Explorations. Well, if gold goes to 2,100, the upside is not that great. 10% upside. So I wouldn't be in Tor Explorations right now. Not enough upside. So I will keep these 3 gold miners for the time being, because I don't see a lot of risk if gold goes back to 2,100, and I would get out of these large caps. If gold goes back to 2,100, you are going to see a lot of pain in these large caps. So just choose the juniors, and the best juniors here currently are these 3 here: Serabi Gold, Monument Mining, and Soma Gold. If you can find any better, just tell me, send the company to me, and I will analyze it. If I like it, it will get in the portfolio. But as of now, I have not found any good gold miners yet. So that was the update, and I'll see you in the next one. Bye.